Okay guys, so this is day one of how to read price action. Okay, in this we are going to see for next 30 days how and why price moves from one place to another. Okay, basically how to read charts. So let me tell you the basics. Currently we are looking at Nasdaq and S&P. We can see that Nasdaq is outperforming from these three averages. Okay, US 30, SPX 500 and Nasdaq. This is the outperforming one right now, but let's see what we can get today and what we can learn today in the live market conditions. Dow is the weakest. This is the US 30. It looks the weakest. This is the pre-market session from 7 a.m. New York local time to 9:30. 9:30 is the opening bell. Okay, so every day we will mark this from 7 a.m. to 9:30. That is the pre-market session. Currently it is moving higher. If you will look here, right there, what happened? Market was going down. It took this sell side. This was the initial sell side for the pre-market. It took it right there and it reversed. So we will try to think like how smart money will counterparty to the retail and they will make the most of it, because 90%, more than 90% of retail loses money. That's a fact. That is a fact. There is a risk involved in this. So I will not be going to show you the my real accounts, okay, all the things, because I'm not a financial advisor. Okay, these are just my opinions and I will show the executions of what I see, what I do in the method of paper trading. Okay, that was just the disclaimer because it is important. This orange is the 4-hour. If you let me show you guys, this is the 4-hour inverted fair value gap. Let's see if this inefficiency, this gap from this low to this high, that is the buy side imbalance, sell side inefficiency, but price took it, market closed lower, so now it should act as the inversion. It will reverse its role. This will act as the inversion, or in simple terms I would say I am seeing some kind of resistance. I'm looking for some kind of resistance inside this, but let's see. We have high impact news at 10 today. Okay, that's Joel's job openings. Let's see how they can manipulate at that time. Let's see, guys. Okay, so I'm looking for lower prices now, and let's see if we can. Now it should act as the inversion, the same way I told you on the S&P. Let's see if it has the potential to become that. Trying to take a shot right there. My SL will go right there, and I am looking for the lower prices. And guys, this is the live market. Markets are open, you can see that. Just see, this is what I am looking at as the TP. Actually, this is the pre-market sell side. So let's see if it has the potential to give me this. Sorry guys, yeah, look at that. It is moving lower. It is happening in front of you guys. Look at that. S&P is more bearish. Now we are currently 18 points up. Let's see, I would like to take a partial when we get below this low. Yeah, let's get below this low, then I will look for, yeah, I'm taking a partial right there. Now I am reducing the risk for this trade, and this is the gap I am looking at. That is the first presented fair value gap for today, and it should act as the inversion. Okay, this gap should act as the inversion now. And if bodies of candle will stay below this midpoint of that gap, that will be a good sign for us. And let's see, with this, it has taken the pre-market lows right there. Let's see how it reacts inside this gap. Just, yeah, this should act as the sell side imbalance, buy side inefficiency for the ES, and Dow is the weakest. Look at that, Dow is in the negative, S&P is still plus 10 points, and Nasdaq is highest. But let's see. Look at that, bodies of the candle stayed below the midpoint of that first presented fair value gap. Now I am completely taking the risk off from this trade. Okay, I have completely removed the risk, and also I would like to reduce one quantity here. And now I would like to hold and see if it can go below the 930 opening and reach my objective. And we have to keep that in mind, we have a high impact news at 10. So if I will get my target below the high impact, that will be a great thing. And now there is no risk in this trade. Risk is completely removed. I will tell you the exact logic why I took this trade once it's completed. And I showed you this on the 4-hour. I told you that I'm looking for this level to act as the resistance, and look at that. Now I'm reducing the risk and increasing my profitability. Let's see if we can get below this low and below this 930 opening. I would like to take a partial now at 930 or below 930, and my stop loss is currently plus 15, so this is a very good place to be in. Yes, let's see, 950 will macro will start, and inside this 20 minutes of interval of time between 950 to 1010, look at that, I'm taking a partial right there. I've taken a partial, now only one is left, and let's see if it can quickly give us this. Look at that. So I have now more increased it. Let's see if it can give us our target, that is right here. And I'm telling you guys, I don't need my target. If it will go against me now, it will take me out right there, and that will be a positive stop out. Okay, but I don't think, yeah, we got that right there. That is good. We have exited our trade before the high impact, and now it's time to wait and watch how it can deliver. I was looking for just a low hanging fruit objective below this sell side. This was the pre-market sell side, and in few minutes I would like to share with you the logic of this trade. Okay, let's see at 10 how they will try to do some kind of manipulation, or they will just bump it lower. because I told you guys I'm looking for lower prices and I executed in front of you. So these are the executions. Yeah, right there. That was the first entry, you can see, and I took one partial here, one right there, one here, and one we ultimately get to our target. Okay, that was the execution. And this is a skill set, guys. Okay, and it took me a long time to reach at this point, okay, where I can confidently execute and share it with the public. But this is not easy, okay, this is not easy, because you have to understand that my basic principle regarding trading is very simple, but people can't understand simple things. They want to make things complicated. My concept is pretty simple. It's buy low and sell high, and sell high and buy low. That's it. That's what I did here. I shorted right there, that is the high, and I buy back at lower prices, and right there I was executing the trade. I was managing the risk impeccably. Okay, this was the initial risk I took. Then I reduced the risk, then removed the risk. After that I started increasing my positive stop out. In that way it can't take me out in a loss, because winning trade should never turn into a losing trade. Okay, and the markets are gonna trade the same way next week. Okay, tomorrow it's gonna have same morning session. Okay, it's gonna have the same pre-market session from 7 to 9:30. Okay, and at 9:30 we will get some kind of fake move, that is a Judas, that's a fake manipulative move, one-sided. We got that. Okay, it's gonna have liquidity runs. You can see that there was sell side, market came down and took that liquidity out. It's gonna be all kind of repeating things. So I don't think there is anything to be stressed. Okay, but sometimes like if you will check the yesterday's AM session, it was quite choppy. Look at that, it was quite choppy. But yesterday also I took the trade right there. This was loss, first loss, then I took it here and covered it here. Okay, but it was in a very high resistance way. This is not clean price action, this is back and forth price action, because yesterday there was no high impact or medium impact news drivers. Okay, so there was no reason for them to manipulate the price in the morning. Okay, and I have learned that yesterday it's better to trade the afternoon sessions. Okay, it's very much better to trade the afternoon sessions when we have no high or medium impact in the morning, and that too on Monday. And look at that, in last hour trading we get that good move on the upside, and in the morning session it was very back and forth. But today we have a high impact news at 10, and you can see we entered here and very smoothly in a very low resistance way. Okay, and this is not, I'm talking about the support and resistance. Low resistance means it is moving in a very smooth way. Okay, it is moving in a very smooth way towards the downside. It is in a hurry to reach the objective. It is not dilly dallying. Okay. And in reality, study of candlesticks, if you have to learn how to read price action, you need to understand that these candlesticks are not just candlesticks. These candlesticks are the study of the psychology of yourself and of all the other traders, those who are there. And this is something deep, but you will understand it once you will get there, because there are stages in this. And now I am not in hurry to take any trades, because you don't need to trade more to make money. That is a trap. That is a bloody trap. And my opinion and objective is pretty clear. Markets are manipulated. Okay, they are controlled, and they are not random. Markets are not random. This is not buying pressure and this is not selling pressure. It is not moving because of that. It is moving just for the sake to be efficient and take out liquidity. It moves from inefficiency to liquidity and from liquidity to inefficiency. That's it. That there are just two things that market do. Just 1 minute left for the high impact news. We will see how they do the price manipulation at that time, and after that I think that will be enough for today. I will come back tomorrow and I will do the same things tomorrow. We remove the executions. You can see it clearly. Let's see if this gap will sustain the price. Sorry, if this gap has the potential to send the price lower. And yes, it's 10. Let's see now. Or it will just get completely broken on the upside and it will move higher, take the people out, those who are still in short. Or this gap right there, that is the sell side imbalance, buy side inefficiency. That is CB. Okay, that is CB. That is an imbalance. You can see that gap, that is sell side imbalance. Okay, what it is lacking? Buy side. So that this gap is the sell side imbalance, buy side inefficiency, and price is trying to stay at the lower half of inside the low of that right there. So there was no such big flash of movement, but now it can move lower below the midnight opening price, and this gap, look at that, it beautifully respected it and sending it lower. But now I'm not going to push any button. I'm done for the day. That was it. But that, this is the 4-hour buy side imbalance, sell side inefficiency. This blue gap right there, this is the 4-hour buy side imbalance. It has an imbalance on the buy side and it is inefficient in the sell side, so we will call it buy side imbalance, sell side inefficiency. Let's see how on the lower time frames it's going to respect it or break it lower and move towards these sell sides below the midnight opening price. But now if we will mark the 950 to 1010 macro in the S&P, so we can see that Nasdaq is trying to make lower lows while S&P is still holding. If you will rewind the video, you will see that at a point Nasdaq was 112 points up and this was S&P was still 10 points, and now Nasdaq is 52, 55 and S&P is trying to hold it now. So that is it. And now I'm not worrying about ki I missed this move. I don't need to worry about all those things. I was confident in my analysis. I did not second guess myself. And yes, before closing, let me just give you a brief logic for this trade, why I took that. And I know you guys must be waiting for this. Why I took this trade? What was the reason that made me shorting near the high for this session? What was that? What was the bloody reason for me to short? So let's show you guys something. Look at this. If I just mark from this swing high to swing low, that is the that is the 930 opening for the S&P, and S&P made a lower high between 930 to 940. It made a lower high, and this is the, I told you this level I'm looking at the midpoint of that 4-hour buy side imbalance, sell side inefficiency. But now I'm looking that buy side imbalance, sell side inefficiency to act as the inversion, or that will act as the sell side imbalance, buy side inefficiency. In simple terms, I was looking from this level is the resistance for me. In simple terms, I was looking for that, and S&P made a lower high. And now look at the Nasdaq between 930 to 940. from here to here, Nasdaq made a higher high. So that is the SMT. SMT means that is a kind of divergence. I looked at that. That was the first point. That was the first reason, the divergence. Now that was not all. Okay, that was not all. And then second thing is we are above the 930 opening price, so we are in premium. That's the second reason. And also we are above the midnight opening price, so we are in extreme premium. I don't need any indicator to tell me we are in overbought or oversold. Price is telling me everything that I need to know. That's it. I just need to combine it with the time element of the chart, and you will create your model for yourself. And the second reason is, look at that, this gap is the buy side imbalance, and that is inefficient in the sell side. But market came down and did not respected this buy side imbalance, sell side inefficiency. Sorry, buy side imbalance, sell side inefficiency, BC. Market did not supported it. It broke it. Okay, it closed lower. It completely collapsed. Okay, so now I am thinking that this gap would act as the resistance to send the price lower. In the same way, as I told you on the 4-hour on the S&P, look at that. As I told you, I'm looking for this buy side imbalance, sell side inefficiency to act as the resistance from the midpoint of that gap. That would act as the inversion now, because same thing happened here. Price broke that lower, does not respected the buy side imbalance, sell side inefficiency. So now I'm looking it to act as the resistance or as the inversion. The same logic, I used it on the Nasdaq for this trade. Look at this right here. That is the gap, buy side imbalance, sell side inefficiency. It broke it lower, and right there I took the short. That was the second reason, or the third reason, I would say. And yes, that's it. That was all the three reasons what I was looking for. These are algorithmic signatures in price action. Okay, market deliver on the basis of time and price. Okay, and these markets are driven algorithmically, and now I don't need to prove this to anyone. If you believe it, good. If you don't, then subscribe to whatever idea you have in your mind and do whatever the F you want to do. But if you are here to learn how to really read these charts, okay, these charts, how to read the price action and how to become an informed individual, okay, you need to see it by yourself, and you will not get it in day one. You have to practice it for a long time, and it will take a long time, guys. I don't care whatever the influencers, those who are selling you courses and what not, are telling you. They are just selling you dreams, and this industry is a fucking hard industry. This is the most difficult thing to do in this world. Yes, it is. And if you have some real dignity for this industry, you will accept it, that this industry is really hard. It is not easy. But people are trying to make you fool because they can't show you these things. They can't prove this. So they don't have the skills. They have the skill of the content creation and for the drama and to make shit, okay, clearly. But I have no personal grudge with anyone. Everyone has to make their ends meet. That is totally fine with me. But they are making fool. They are making fool out of you. They are living their fake lifestyle because you are paying them consistently, and they don't. My main problem is they don't want you to become independent. That is the main problem, because they always want you to be with them, always. They never want you to become independent and leave that group. And I'm telling you guys, trading is a solo sport. It is an absolutely not a team sport. It is not a team sport. I don't care what people say. It's only you versus you. You are only there as the decision maker. And as a trader, your only job is to execute and manage risk impeccably. That's it. And the analyst inside you has the job to understand and read this price action, read these charts, and trader has the responsibility to execute it efficiently without second guessing it, and manage the risk throughout the trade until the trade gets over. And once it's done, it's done. You close the shop, you go back home, you come back next day, do the same things, and that repetition again and again and again for months and months and months will give you the results that you are looking for. Okay, and now I don't care whether it's going to go up or down. I am done for the day. I this was the bread and butter setup for me. I took it. Now it is very important for me to keep this in mind, and you also, that I don't push, because now I am that stage. It took me 8 years. Okay, it took me 8 fucking years to realize this. My mistake is just that I am getting bored and I am trying to push more when I am losing, and that is a very bad thing. I'm trying to push more when I should just leave. I am doing more than what is necessary. That is not necessary. In trading, if you are pushing more, that is not going to help you. Period. Less is more in this industry. And this is a psychological war you play with yourself, because as a human nature, you have to become totally opposite of what a natural human nature is to become a consistent profitable trader. I'm not going to sell you dreams. It is hard, but it is obtainable and it is fucking possible. You can learn to read these charts and you can learn to become a consistent profitable trader, but you need to have patience and perseverance, that obsession, that passion with markets. Otherwise you will never gonna get it. I don't care whether you are a PhD scholar, whatever the fuck you are not, or you work for someone elite or whatnot. I'm fed up of all that now. Just ask yourself this simple question: how by seeing the other individual making X or Y amount of money is going to help me to read these charts? How that will gonna happen? And you are getting influenced and distracted by all the wrong reasons. This long pause is for you to reflect. What the F you are doing? Why you are chasing all the nonsense stuff which is not at all going to help you in learn to read these charts? We'll leave you guys with this thought, and until next time, be safe.